Okay, I thought I could type this up, but I'm gonna do a video instead so that people can see, because I think if you watch this video, this will help you with a ton of other situations like why did my chart or why did my trade not turn out in X market conditions. So this is the most that I know about this stuff. I'm still not a pro, so obviously I could be wrong or off about this stuff, but I found that this mindset helps me a ton. Okay, so we're looking at this day on SPY, the Monday on SPY, where it's just D1 gap, gap, gap. Just the most disgusting, insane, apocalyptic, crazy, weird drop you've ever seen. Not necessarily capitulation, but it's definitely a weird ass pattern. Huge drop out of compression. So we already know we're coming into this day and the game is a little bit different. So in what way is the game different? Well, let's take a look at this. So if you're looking at the bottom of Friday's candle, all the way down to the start of here, we have already dropped 2.5% out the gate. Right out the gate, we've already dropped 2.5%. And then in the morning, it drops even more. We actually drop all the way down 3.78%. And if you zoom out on the D1 on SPY, there are not many candles that have a 3.7% range. So you already know that this thing has really been moving and hustling, and it might be a little bit tired. And you know, it might drop further, or it might bounce like crazy, or there will be some sort of reaction, but we do know it's probably likely that it's going to be out of steam for the next little while, and it needs to be able to have something happen to it to reload potential like victims or buyers or whatever you want to call it, for them to actually continue to propel this thing down further if your bias is bearish. If it's bullish, you're just going to have to see it break the opening range and show consistent buying, etc., to come back up. But that's what everybody was looking at the gate in the morning. They wanted to see things drop. They were looking for bearish charts. Nobody wanted to go long. So you're looking at this and it's just kind of tootling. It's really not behaving in a way that you would think based on a drop like that. And the reason is because out of market hours, most of that energy happened, and now this thing doesn't have any more steam. It's dropping. And so, you know, over the morning, you got to remember, this is like 2 hours. This is a 2 hour or 1.5 hour situation. That's a long time to be sitting, waiting, doing absolutely nothing. And this whole time you're thinking, man, I'm missing out. I'm missing all these amazing shorts. Look at them all going by me. In fact, there's so many good D1s that are showing so many good short opportunities that you actually are like, you're like uncomfortable. You're like squirming around going like, how am I supposed to just get all these great opportunities? There's just so much good stuff to get. It's like you're trapped in a telephone booth with like money spinning around everywhere. Well, I'm going to tell you that situation where you see so many good opportunities is not actually as good as you think. And here's why. And I'm going to use C as an example. There's nothing really wrong with this chart. It's a very nice bearish chart. It's in a big old downtrend. It's really dropped the same, but it's dropped almost identically the same as SPY. But you know, you're hanging out right here, and you've got this nice little range to come down all the way down to D1 support as well. And maybe this algo line right through here that cross might play as well into the mix, but it's already way down there. You got a lot of room to move. There's some profit potential here. And you're vetting this thing as a stock. Well, one of the first things you need to look at is, where is this weakness coming from? Is this weakness coming from institutional selling on this exact symbol, or is the weakness coming from stocks in its sector dragging it down, or the market just dragging this down? Because if it's the latter, that means that if anything changes in terms of sector rotation or the market, you're screwed. This thing is going to bounce right back up. In fact, this thing might be fighting the changes that it sees from its sector in the stock, and it might actually be strong, in which case you're even more screwed. So you want to find a stock that is weak on its own, so that if the market changes or the sectors change, there is still some cushion room and you can get out, scratch, or continue to make profit. Here's why C is a choice that I actually passed up, even though the chart looks pretty good. If you look at the nature of the relative strength on this, on the 5-day relative rolling strength average on the D1 chart, you can see SPY in blue, you can see the sector in green, the sector in yellow, and you can see the stock in green. Now, if you see the stock, it's a little bit weak against SPY, so you go, okay, it's got relative weakness, but what is creating this weakness? It's the sector. The sector is literally pulling this thing down. And if this thing is in the financial sector and the sector is this weak, that means that this thing is actually a strong stock. It's actually got relative strength. It's just the sector itself. And then you might be thinking, okay, well, who cares? Well, the reason why you should care is if this rotates out, this thing's going to pop back up. You're not going to get the same relative weakness. Or on another front, you might be saying, well, why am I choosing C if I know for a fact there are other stocks in the financial sector that are much weaker, that are the ones doing the actual work? So that's the first thing. That's why I didn't choose C. Secondly, I had no idea if intraday C was actually weak. Okay, and here's why. As SPY is going down and down and down and down and down, there really aren't any significant pullbacks or any sort of rallies until here to be able to tell how the stock is going to behave intraday. And you look over here and you see all the sorts of red candles. So red candle, red candle, red candle, red candle. And in comparison over here, there's a little bit of a mix, right? There's some green, there's some red. Okay, that's cool. But once again, if you look down at the nature of that weakness, you can see that the stock itself on the 12-period intraday relative rolling strength is actually not really doing the work. The sector is doing all of the work. And as you can see, as soon as things flip around, the sector gets a little bit strong, which means that the reaction to C is more than it should be, pulling it up over top of VWAP. And that might be where your mental stop is, right? So let's say this thing pulls up to here. You go, okay, candle, candle, I'm good, I'm safe. But then it pulls up to here and this candle literally closes above VWAP. A ton of you guys might have been using VWAP or confirmation above VWAP as a reason to exit. And I know I was one of those people too. And I actually bailed on a stock early because of that as well. And so if you have a stock that's a little bit too strong, it's probably going to pop over top of your mental stop and then go back down. And you needed to wait until something like this happened today to be able to see that, right? So as soon as something like this happens, you can then take a look at all of the stocks you're vetting and see how they respond to that. Did they respond to that in turn? If I go to a stock like RC, take a look at this. This thing is going down, 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 down. And then right here is where we get that SPY rally. That, it doesn't even break the 8 EMA. And why is that? Because down here, the stock is actually weak with the sector. It's weaker than the sector. And if we look over on the daily chart, oh, look at this. First of all, this is a disgusting D1 bar right there. But more importantly, this thing has room. It broke underneath that trend line. Boom. And it's got room to move. And then look at the nature of its relative weakness. RC is one of the stocks in its sector that is actually pulling the weight of the sector down. This is a relatively weak stock that is doing most of the work to make this sector relatively weak to SPY. This thing is stacked and it's weak. And this thing is a really nice entry, but you still had to wait to see how it behaved against this rally up through here. So I'm going to drag up through here and you'll be able to see over here intraday how RC is behaving. So as we just slowly meandering up on this like weak rally, which doesn't really have a lot of gas in it, we haven't broken the high of the day. We have a little uptrend there, a little test on that support line and then back down. And then all of a sudden we get that big rejection near the opening range, or like right about to break out of the opening range. And then wham, this thing is just dying again and RC responds in turn. This is the type of weak stock that will actually give you more bulletproof trades in a situation like this. And the reason why we had such a hard time is we didn't see anything happen until 11 o'clock, and a lot of us aren't patient enough. I entered some shorts here, and I also entered some shorts there. Essentially what I was I was impatient. Okay, but I was entering shorts that at least had shown their worth, and that is the only reason why I survived and finished in the green. It was actually kind of bad trading on my part. In fact, the only time where if you were looking at when you should actually take a short would have been right here. A confirmed candle below the entire pattern. But are you going to wait until 3 p.m. when you're trading to do that? Probably not, which means you're going to have to be a lot more agile, nimble, and a lot more skilled and scalpy and wait and be patient and watch these things whip around and trust what you saw in them. The reason why yesterday was so hard was because the pattern you were trying to see break was actually on the 15 or the 30 minute. You can see this nice little like wedgie triangle sort of thing. And it wasn't until right here confirmed that you actually break underneath it. But who the hell is going to wait that long? So that's why it was so challenging yesterday to find good stocks. So here's what you should do. When you are vetting stocks, find all of the ones that have the pattern that you want, which is like a break of an upsloping or downsloping trend line or whatever situation you want. Gather them all up, but then you need to make sure that the weakness is coming from the stock itself, unless you plan just to take a light little day trade for a couple of candles, but that's more of an advanced strategy. And then next, you need to just sit on those and wait. So this morning or yesterday morning, what I did is I had about 30 of these charts with that upsloping trend line like C break. There was like hundreds of them, but I chose 30 of them that actually had relative volume and actually had this little stack thing. This one didn't, but actually had a stack. Out of the 30, what I did is I just deleted them slowly off the watch list as SPY popped back up and they showed their true colors. So this is a long video, but that's the process for which you can actually find stocks that will do what they're supposed to do. I hope this video helps. And if it doesn't, or it's too long or whatever, let me know. And if you want more information, you can also ask me too, and I'll film another video.